Our next speaker needs little introduction to this crowd. We're thrilled to be joined by the Department of Treasury's Deputy Assistant Secretary for Community Economic Development, Noel Andrés Poyo. Deputy Assistant Secretary Poyo is a longtime champion of CDFIs. He was actually on this stage last time we were here in 2019 when he was in his previous role as the CEO of the National Association of Latino Community Asset Builders, or NALCAP. Since joining Treasury in 2021, he has overseen record-setting levels of funding for CDFIs, including the Rapid Response Program, the Emerging Capital Investment Program, and the Equitable Recovery Program, as well as managing all of the existing CDFI fund programs and OCED policy team. On a personal level, I had the opportunity to work closely with Noel when he led the writing of a study of Latino businesses in California about 7 years ago, which resulted in my organization establishing a Latino loan fund, which has financed over $10 million to Latino businesses in California. We appreciate his commitment to our community, and we're so pleased that he's here and able to join us. Please join me in welcoming our very good friend, Deputy Assistant Secretary Poyo, to the stage.
Good afternoon, buenas tardes. Good afternoon, buenas tardes. There you are, there you are. I'm used to coming here, I know who's here. So my name is Noel Andrés Poyo. It's great to have my name fully pronounced correctly. You know, I know many people in this room, but I'd like to give you a little bit of background on what I've been up to at Treasury. I'd like to talk to you just briefly about CDFI certification, because I think there's a little bit of interest in the room around that. I am not making any announcements today, just para que sepan. I'd like to talk to you about the Treasury Department's approach to community finance, which I think is actually the real deal that you should be listening for. So I joined in the earliest days of the administration. I had the opportunity to lead a range of the policy development and operational stand-up of a range of emergency programs. And so I was privileged to be able to lead the rollout of the nation's first scaled eviction prevention program with the Emergency Rental Assistance Program, a successful effort to support distressed homeowners, the Homeowner Assistance Fund, and some historic investments in the CDFI and MDI sector, ESIP, and the CDFI programs that Robert mentioned. It's been a busy few years, but it's also been an extraordinary privilege. And, you know, so I want to say just briefly a few words about CDFI certification. Earlier this year, the fund indicated that we would be releasing this fall. I want to affirm that we're on track. You can expect that. The certification process, as you all know, has not been updated in more than 25 years, and a few things have changed in that time. The number of CDFIs, the extraordinary amount of funding flowing in this space, rightfully so, a growing bipartisan support for CDFIs over time, and a range of other government and regulatory institutions conferring benefits to CDFIs. And so this certification was not built to sustain that sort of weight. And it needs to be updated for this reason. But I want to say a few words about what we have heard in terms of feedback, because we have gone through a process of community engagement and listening for the CDFI fund for more than 7 years on this. But it's been particularly intense in the past year. And we've heard that that there are stakeholders that express that there was insufficient specificity in places in what was released last fall, that there was a lack of clarity. But on the other hand, we also heard from many stakeholders that the CDFI fund should maintain the ability to be flexible. There's a balance there. And balance is a word that I hope will characterize the way you think about where we end up going. Many in the field expressed that it was a very good thing to better define what it was to promote a community development purpose, to be clearer on that. But many also expressed, be careful in the details, because you will constrain community development lending. You will do things that do not reflect the reality of our lending. And so again, there was a balance or a tension there to be struck. We heard feedback, a great deal of feedback, particularly about proposed provisions around mortgage. We listened closely to the details there, and the field responded by providing incredibly detailed feedback and comments. And we also heard that there was a need to strengthen accountability, to make sure that accountability was matched well to different kinds of CDFI business models. But we also heard very clearly that the concern about board members and whether or not they've got a loan product with the institution on the board that they serve, or whether they're compensated, and that those were concerns about whether that interfered with accountability. And so we have been listening. I've mentioned a few specifics here. I jumped into the weeds immediately. One, because that's just who I am, but two, because it is important that we show that we are listening. And so I hope that helps to demonstrate. But I want to pivot here and say that all of this is happening. CDFI certification certainly is incredibly important, but there is a broader context here, and you can look across this administration's approach to community finance and see some through themes. And I want to point some of those out to you. Now, it's again very easy to forget that when President Biden took office, COVID-19 was still ravaging this country in terms of a health crisis and an economic crisis. And while the circumstances were dire, this administration leapt to with deploying emergency dollars, engaging with partners, many of you in this room. And so we have recovered from a moment that I think is easy to forget how frightening it was. But that was not enough. And the president challenged this administration from top to bottom to not just sort of dig us out of a hole, but to put us on a path to a more equitable economy. And those were different pieces of work, certainly interrelated, but different pieces of work. And so, Secretary Yellen, and I have to say, this is a leader under whom I am so proud to serve. This is someone I knew before I went to Treasury, but working for her has been a privilege of my life. Secretary Yellen has articulated an economic theory, a strategy that she calls modern supply-side economics. And it calls for boosting economic productivity by addressing inequality and making investments in people and places and infrastructure that have been constrained in their access to capital, have not been able to participate fully in the economy. And this is the leading labor economist of our time. This is the Secretary of the Treasury of the United States of America, and she has articulated why it is we have a CDFI industry, right? And so the community finance programs at Treasury have been an important part of implementing this approach. It's been an extraordinary amount of resources. This State Small Business Credit Initiative, the Emergency Capital Investment Program, the CDFI programs that we mentioned. And we are now currently partnering with EPA and others across the government in implementing the wide range of resources that were made available under the Inflation Reduction Act. But in Treasury's approach to this, the sheer amount of funding is one thing, but the policy that underlies the deployment of that funding is another. We have focused on setting clear standards for defining community development. And certainly I've already mentioned the work that's been happening that you already have a reasonably good view of based on the draft from last fall, and are listening to all of these comments that have come out. But providing more clarity about what this really means. And I will point out that this is important not just for protecting the space. Certainly there are risks in sort of the definitions of what it is to promote community development being sort of loosey-goosey. Our lawyers did not approve that statement. But on the opportunity side, it constrains opportunity. It is very hard for investors to invest in a scaled way in a space that is just still a little fuzzy. And so clearer standards, that's certainly the foundation. Defining deep impact. We have differentiated between the kinds of things that are eligible, that are permissible, certainly, but those things that are truly difficult. And underlying our idea of deep impact is that there is a realistic financial disincentive to make a loan to someone for whom it costs more to prepare them. Because the loan is smaller, or perhaps on concessionary terms, there will be less revenue off of that loan. You can be as mission motivated as you want, but if the numbers don't work, the numbers don't work. And so there needs to be additional recognition and credit of that kind of deep impact lending. We have done that in our ESIP rate reduction guidelines and in the Equitable Recovery Program. We are collecting disaggregated demographic data on a scale that's never been done before. If you don't know who you're serving, we cannot genuinely stand up and make bold statements about justice and about who is being driven forward in this economy. We will know with this administration's investments. We will know. And for example, the State Small Business Credit Initiative has been collecting a wide range of disaggregated data, and other programs have as well. Equitable community engagement. It is particularly easy to forget when you're in an emergency that it matters that you talk to people. It matters that you go to communities and say, is this actually a good idea for this community, right? And so we have worked in small ways. You know, you go look at FAQs, go look at little lines and NOFAs to encourage equitable community engagement. And you will see this in ESIP, in the CDFI ERP program, and you will see it in the New Markets Tax Credit program as well. And finally, capacity building. We know very well that if you want dollars to flow on an unprecedented scale, you need to build the capacity in community to be able to receive it. And so in, again, SSBCI, you see a technical assistance investment, the long-term recognition of this from the CDFI fund with the TA program. We have been paying attention to the need to strengthen communities even as we invest on an unprecedented scale. My hope is that these policies are not just shaping the dollars that CDFIs are using, but the dollars that are being leveraged alongside them. And I certainly hope that this points a direction for private investors who may be doing this without any federal dollars involved. But if you want to be able to say, what is it to invest equitably? I hope that these are the kinds of principles that folks will focus on, and that we can lead private capital in this direction. You know, I want to wrap up and highlight just, you know, one more sort of detail, which is the need for CDFIs to focus on cybersecurity. You didn't think I would go there. You have no idea how scary it is sometimes to sit next to people in the federal government who do the truly, you know, scary work. And go home, if nothing else, and check your cybersecurity. It is important, and it is something that will protect this sector. Treasury's Office of Cybersecurity and Critical Infrastructure Protection has a free tool out there that you will be hearing more about. And so in addition to good policy and doing good work, protect yourselves. You know, over the past few years, the field of community finance has absolutely transformed. In the scale of dollars, in the boldness of the people in this room. And I hope also that there is a policy framework that will lead us forward in a way that both protects the brand, but also encourages investment, allows investors as we move forward to think, I feel confident by putting these dollars in that this is gonna help change communities in the right way, right? And so thank you not just for the opportunity to speak to you, but for your work. You know, I sat in your seat not very long ago, and I have a deep understanding of the work you do from me and from the rest of this administration. We're so grateful for what you're doing. Thank you.